Hey everybody, I'm Rob Freeman and welcome back to Insuring the Built Environment. This week we're answering the question, what is insurance to value? Well, insurance to value is a property insurance concept that looks at the amount of insurance that you have on your home versus the amount of money that it would cost to rebuild your home in the event of a total loss. And insurance to value is usually expressed as a percentage. So, for instance, if your home would cost $1 million to rebuild, its replacement cost was $1 million, and you had $800,000 of insurance to cover your home in the event of a total loss, you would have an 80% insurance to value amount. Now, most of the time, it's advisable for you to maintain the amount of insurance on your home at full insurance to value. So, if your home would cost $1 million to rebuild, you would want to have the full $1 million of insurance coverage on your house. And usually, insurance carriers will require you to carry the amount of the full insurance to value, or they won't let you go below a certain percentage, say 80%. And if you do, in some cases, you may be subject to a penalty where they wouldn't pay you the full amount in the event of a claim. And this happens sometimes in the commercial space as well, commercial property insurance. In another video, I talk about something called co-insurance, which is a clause or a requirement in a property insurance policy, which is similar to insurance to value. It's actually a type of insurance to value. It's a way that carriers get you to be straightforward and honest with respect to the amount of insurance that you carry on your home in the event that there was a total loss. But, it's important to note that sometimes insurance carriers make mistakes. And so you may have a dispute, you may not agree with what the insurance carrier says that it would cost to rebuild your home. And this may be the case even more today when we're experiencing inflation across the United States and people are experiencing supply chain issues, which could cause the cost of a rebuilding to go through the roof, at least temporarily. And so it's important for you to look at the amount that the insurance carrier is saying that you have for insurance to value, and then look at that and have a conversation with your insurance broker about what you think is reasonable for your area to rebuild your home in the event of a loss. So another thing to consider in terms of insurance to value is there are different ways that insurance carriers will value your home in terms of handling a claim or rebuilding your house and trying to determine how much the insurance carrier will pay. One of them is called replacement cost, which is basically the amount that would cost to replace your home as new today. So it would be, all the fixtures and materials and construction types and everything that you have in your home today as if it had to be rebuilt today the same way you have it now. The other is what's called actual cash value. And actual cash value takes your home's value minus depreciation. So actual cash value is going to be considerably less, depending on how long you've owned your home, than replacement cost. So you'll typically pay more for a replacement cost policy than you would for an actual cash value policy because the coverage is going to be less with actual cash value. So again, these are just things to consider. Insurance to value is the way that the insurance carrier measures the amount of insurance coverage that you have on your house for your property insurance versus the amount of money that it would cost to rebuild your home in the event of a total loss. And one other thing to remember is that replacement cost, or the cost to rebuild your home, is very different from market value. So when you look at your house, you say, well, my house would only sell for $700,000, but if it costs $1 million to rebuild your house, then you might be paying more for insurance than you could actually get for your house in the open market. And that's the difference between the replacement cost of your house and the market value of your house. And insurance carriers use replacement cost or actual cash value, meaning the cost to rebuild your home in terms of how much they charge you for your insurance premium. They don't use market value. They use replacement cost or actual cash value based on the amount that it would cost to rebuild. And that's it. So insurance to value is something that the insurance carriers will require you to use a certain amount of insurance, usually a minimum of 80% in terms of the amount of coverage that you carry versus the amount of money that it would cost to rebuild your home in a total loss. That's it. Hope you guys think this is helpful, and thanks again for watching, and have a great day.